How long is a mortgage pre-approval good for? And does a mortgage pre-approval affect your credit? My name is Travis Anderson. I'm a realtor here in Minnesota and Western Wisconsin. We're going to answer those questions and we're going to talk more about the mortgage pre-approval process. Let's start by answering a basic question. What is a mortgage pre-approval? Because it's different than a mortgage pre-qualification. Now, the distinction is important. A pre-qualification is when you reach out to a mortgage company, you submit an application, they pull your credit, and then they tell you how much you qualify for. A mortgage pre-approval is when you provide documentation that supports the information that you have given in the pre-qualification, and the lender can verify that what you said in the application is accurate. And we're going to take a look later in the video on what it is you can expect in a mortgage pre-approval. But as we discussed, that very first step is filling out an application. And then the next step is they're going to pull your credit. So does it affect your credit? Now, most mortgage companies are going to do what's called a soft pull on your credit. So it isn't a hard inquiry. If you get one pre-approval or maybe two, it shouldn't affect your credit by much. There will be an inquiry on there, and sometimes that can affect the score, but it shouldn't be drastic, and it should be for a limited time. The federal government actually allows you to shop for a mortgage, so they do expect to see more than one credit pull in a short period of time. But in most instances, that credit pull is not going to be a hard pull. It'll be a soft pull, and it shouldn't affect your credit much. So why should you go from a pre-qualification to a pre-approval? Why should you verify your documentation? Well, number one, sometimes we enter information that just isn't perfectly accurate and we need to back that up. Sometimes there's something really simple, like maybe you get paid overtime that we weren't accounting for in your application. Or maybe the lender won't count the overtime that you did put in your application. Maybe your income is drastically changed over a 2-year period. That's going to affect things. So we need the lender to review the documentation to confirm what you've entered into that application is accurate. And then that way they can issue a pre-approval letter. If you come to the table with an offer on a pre-qualification letter, it just doesn't hold the same weight because we as realtors know that that documentation has not been yet provided, and we're less likely to get the pre-approval. Obviously, at that point, less likely for the home to close if we're not far enough along in that process. So number one, it's important to try to predict some of those issues that might come up with your mortgage pre-approval. So you do want to provide that documentation and get going in the right direction. Second reason it's important to get that pre-approval is if we don't have that pre-approval letter, most sellers are not responding to an offer, and most realtors are advising their sellers not to reply to an offer. So you might as well not even write an offer. So you find the perfect home, you draft an offer with no pre-approval letter, the seller's just going to sit on it. They're not going to respond to your offer. And so let's go ahead and get that started, get at the minimum, get that pre-qualification letter, and then start taking steps towards that pre-approval. So we can, number one, when we find the right home, we can write an offer. And of course, we can predict some of those issues that might come up with your pre-approval. And the third thing, it kind of goes without saying, the importance of pre-approval. It really gives you a great total understanding of the cost to buy a home. It gives you a good understanding about how much money you're going to need up front, really good understanding about interest rates. So if nothing else, even if you choose not to buy a home, you're going to be better prepared when you do buy a home in the future, even if it's years down the road. So I always tell my clients, it's never too early to get a pre-approval. Sometimes they'll say, well, doesn't it expire? And the answer is yes, your pre-approval letter expires, but it really expired, like they give you a 60 or 90 day time frame on there, but it really expires the moment you write a purchase agreement. The moment you write a purchase agreement, you're going to need to provide updated documentation for your pre-approval letter. So sure, if it's 60 days later or 90 days later, your mortgage company is going to ask you for updated statements so that they can refresh your pre-approval letter, but it expires at time of purchase agreement anyways, because you're going to need to update your documentation at time of purchase agreement. So yes, it expires, but not for the reasons you think. It's important to make sure you're communicating with your mortgage broker so that you can keep proper documentation and you can essentially just continuously extend your pre-approval letter indefinitely, so long as you're providing proper documentation. Once you get far enough away from the initial credit pull, they may have to do another soft credit pull. Sometimes after providing proper documentation, they'll hold off on that credit pull until we have a purchase agreement, and they'll do it at that time as well. But with pre-approval, you want to make sure that you're not getting new debts, new car loans or student loans or anything like that. So when we talk about needing documentation and updating documentation when it expires, what types of documents are we talking about? Well, really, it's income and asset documents are going to be the most important. So your income documents are going to be your W-2s. If you're self-employed, it's going to be your tax statements. If you're self-employed, it'll need to be a couple of years of tax statements generally. Sometimes you can use 1 year. We're going to need bank statements and evidence of where your down payment is going to come from, even if it's a low down payment or even if it's $1,000 in earnest money, like we talked about in a previous video. You're still going to have evidence that that money exists in some sort of bank account or retirement account or what have you. And then, of course, you're going to need employment and ID verification, so that type of stuff. Once we get through those things, to continue the pre-approval is we'll need homeowners insurance and title work and things like that. And that's where you go from pre-approval to approval, which we'll talk about in another video. Now, as we talked about before, pre-qualification is an application with a credit pull and a conversation with your lender. That can take 15 minutes. Pre-approval is going to be where you provide those W-2s and those bank statements and your ID verification and what have you. And that can take a couple, 2 or 3 days before you get that pre-approval. Then as you move along and as you're searching for real estate, once you find the right home, you're going to need updated documentation. Or if the expiration date leaves, you're going to need updated documentation as well. So we answered a couple of questions here. What is pre-approval? What is pre-qualification? Will it affect your credit? And what happens when it expires? That's what we talked about in today's video. If you've got further questions about pre-approval or anything else, do me a favor. Give me a call, shoot me a text. Hit me up in the comment section. My name's Travis Anderson, and as always, all my best to you and yours.